Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at SPY on the daily, weekly, and shorter term time frame. So a strong start to today. We rejected from the 10-day moving average resistance to the penny. At that point in time, it was 214.69. And then we closed down near the low of the day and right on the 100-day moving average support. So very clearly, that's a weak follow through. And this is the second weak follow through we've seen. We saw the big dump, weak bounce attempt, another big dump, and now some weak follow through again. And we'll look at the shorter term time frames to point out a whole bunch of trade setups and how we knew the weakness was here today. So from this point forward, we're looking at the low of Thursday's dump, 211.21, the low of the September dump, 211.24, and keep in mind StockCharts.com adjusts their price for the SPY dividend to eliminate that artificial change in price, and you can look at SPX to get levels if you don't want that to be the case. So the S&P 5 or SPY here on the weekly time frame lost the middle Bollinger Band support. It was only by 11 cents, but we did close below it, and that's the level we bounced off of on the Brexit dump, and we bounced off of it on the dump in September. Now we've lost that level. We have a lower high and a lower low, and the bears are in control of the markets here, and we are losing key moving average supports. We have just that one 200-day moving average left down at 205.04, and on the weekly we're looking down at 204.48. So if this weakness continues, depending on how earnings go, we have 2 weeks of lots of earnings coming up. And if they are really good earnings, we could see the market turn around. But if not, we're looking down to this low 200 to 205 range for a short-term target for SPY. And whether that's going to be a dump or play out over a few weeks, that remains to be seen. But earnings is going to give a pretty big clue as to what to expect. So let's now look at SPY on the 5-minute chart, some indications of weakness. We started with strength today. Like I said, the pre-market, we hit a high, we pulled back, and then we hit a higher high, breaking the high of pre-market first thing this morning. Then we've consolidated, and then another higher high. At this point in time, when SPY was hitting higher highs, I have my 20 tickers up that I'm watching, even more than 20, but all the big names, Apple, Netflix, Facebook, Amazon, a whole list, and no one was up near their highs. Facebook was the only one close to its highs. But other than that, nobody was up at its highs while SPY was hitting higher highs. So that stood out as a little bit odd that was not occurring. And we saw the biotech sector weak, the miners weak. So we're saying who is holding up SPY? Thought it might be the banks because JP Morgan beat earnings. Looked at the banks, that was not the case. So we knew to be looking for weakness, and we just needed the signal. So the signal that, for me, that was laid out was the 20-period moving average support being lost was your bearish signal. And we did end up losing that. There were other signals there as well. This is a little bit of a bearish head and shoulders pattern. So you could have had a bearish entry when we broke the higher low pattern by breaking 213.36, the low of this consolidation. The loss of the 20 period, or if you wanted to be even more patient, a loss of the left shoulder here support down at 214.23. So either way, losing that 20 period support was your bearish signal. Look at the volume. This 3 candlestick bounce, very weak bull volume, decreasing volume. And that shows you that the bulls don't have any strength at all. And then it was followed by high bear volume that was increasing for 20 minutes in a row on a dump. So that's your bearish entry signal right there, and we had some people miss that bearish entry, so they wanted another shot at a bearish entry. And we saw the bulls defend this 100-period moving average support. Didn't really form a bear flag, didn't have enough time to play out. But here's an example where I was watching SPY at the exact same time, or I was watching oil at the exact same time, and I get questions, why does it matter that oil and SPY are correlating? If you're watching one, isn't that enough? And the answer, in my opinion, is no. If you're watching both, you're getting clues that cannot be seen otherwise. So here is oil, and I'm looking right here at just after 11 a.m., 11:10 to 11:15 a.m., and that's here on oil, right around here, 11:10 to 11:15. So this on oil is a much more clear bear flag of a much more clear pattern. There it is. Parallel support and resistance lines. And as soon as oil breaks the low of this pullback, which was down here, and not showing the price on this because I squeezed the chart. But once that low broke, you know that's confirmation of the bear flag and lower lows are coming. So at that point in time, SPY had not broken the low that we had seen right here. So we had bounced a little bit. When I saw that bear break, I looked right over at SPY, and SPY was at 213.77. The low of this candlestick here is 213.69. So we were still 8 cents above the break. Oil had already broken, and at that moment, I had already known, I would say, let's say we have a 60% chance that we're going to continue to lower lows because that's the trend. As soon as oil confirmed that bear flag and set a lower low, my percentages that we were going to see new lows in SPY probably went from 60% to 80% in that moment. So I went over, looked at, saw SPY at 213.07. You figure, big whoop, what's an 8-cent heads up? But if you're trading weekly calls, 8 cents is a big heads up and a lot of profit left on the table if that signal is missed. So right when that occurred, I said possible bear flag on oil in the chat room. Then I confirmed it and said that it's likely now that we see SPY follow. And then we saw SPY dump, and from there 213 to 213.77. Let's say 10 minutes later we're down at 213.36. So a 41-cent drop in 10 minutes, and those are big gains. And then again, we continued to further downside with the bears in complete control for the next 45 minutes to an hour after that. So that's just an example of where using oil gave the heads up, gave an 8-cent heads up as to another bearish entry on SPY, because you can see here it's not a clear bear flag. The price action is kind of there, but in terms of the shape, it was much more clear on oil, and that was the clue. Let's look at the key hourly levels on SPY today, the 20 period, yesterday and today. Look at this 20 period support. Breakout, backtest, hold it. Today we held it 1, 2, 3 candles in a row. We lost it. Next candlestick, backtest and rejected. And then we had a dump at the end of the day. So very clear. This hourly chart was great. Key support held yesterday. Key resistance rejection. That was another factor that had us looking bearish. We saw 2 candlesticks in a row setting up for rejection from this 100 period hourly resistance. We bounced off the 20 period again, and then dumped. And that was a little bit of a bear flag in itself. So lots of clues out there, lots of time frames, oil correlations, and a nice bearish play on the day. Hopefully that helps with something. Thanks for watching. Have a great weekend.